So retail investors who bought into Trump media stock 3 or 4 weeks ago have now lost 64% of everything they put in. I have put a link to a video I did last week about Trump media, and I really wanted to talk today about the dangers of retail investing. So retail investors are a name given to the general population who can now go onto the stock market easily using an app on the phone or on their desktop computer and buy and sell shares at will. Now, there may be some benefits to that, but there are certainly some downsides as well. So historically, it was quite difficult to actually go onto the stock market and buy trades, and you'd usually need to go via a professional. And, my guess is, 20 years ago, if you'd have gone to your financial advisor or whoever it was placing trades for you and said you were buying some shares in Trump media, they'd have had a proper chat to you and said, do you really want to do this? Whereas now, you're not going to get that advice. You're going to open an app, you're going to log on and you're going to place your bet. And that's what it is. It's a bet. So I really feel sorry, actually, for anyone who's been caught up in the Trump media, Truth Social fiasco. And I've gone in 3 or 4 weeks ago, bought a load of shares and seen the value of them shares drop by 64%. And the fact that they changed the rules at the last minute, which meant that Trump now, instead of having to wait until September to offload his shares to pay for some of his legal fees, he can now do that much more quickly, which means that the market knows that once he gets rid of his shares, that the price will drop yet again, which happens when a large investor dumps a lot of shares. So potentially more pain to come as well. And it's a lesson really for the regulators to look at how consumers can be protected when they are acting as retail investors, and how as a world really we can ensure these new freedoms about the ability to go onto stock markets and buy shares doesn't impact too many people particularly through frauds and what goes on social media. So let's talk about the specific issues that retail investors face. So the first one for me is lack of knowledge. So retail investors, they're not going to have the necessary knowledge, discipline, or expertise really to be able to assess investments thoroughly. The second one is information asymmetry. Now, this means basically that in the stock market, it's often a zero-sum game. Some people will lose, some people will win. And the investors from the big firms will have much more better information than the retail investor. So they've got an unfair advantage. I also want to talk about market impact. Although retail investors have smaller trades, there's millions of them. So what we can get sometimes is panic trading, or what we call crowded trades, where people will move into the market far too quickly. They'll move in way before they've done any proper analysis on the stock, looking at the background, the financials behind the company. So we've seen that with GameStop, for example, where they were able to massively move the market as a trend, which came from Reddit. And it was soon reversed. And I think everyone that was watching that knew that it was never going to end well, unfortunately. So that's the market impact, and it's the sheer size of the number of people who are in that marketplace that make everyone nervous about retail investing. Also, the next one is vulnerability to manipulation. So retail investors can be susceptible to fraud and market manipulation just due to their lack of experience, really. Anyone who's kind of professionally trained may be able to much better spot a scam where that's difficult for the retail investor. And the next one for me is the influence of social media. So social media increases the risks that we'll all be unduly influenced by what we read on YouTube or Facebook or whatever, Twitter or X or whatever it is we're using. And the final one for me is all about regulatory compliance. So if you are a professional, working in a professional firm, there'll be a lot of laws which apply to you, which you'll need to know about to be a professional. Now, if you're a retail investor, you're not going to have that kind of level of training about the regulation, and therefore you'll be much more susceptible to making mistakes out there in the marketplace. So that's my rant. I'm going to put a link into the video I did last week, which talked about Trump media and its stock price. Please check that out as well. So if you've heard my outro, then thanks for listening. And if you haven't, then here's probably the most important bit of investing advice you'll hear on YouTube. Don't buy or sell shares in a company based on what someone on YouTube tells you. The big Wall Street analysts have large teams of professionals with access to vast amounts of data on every single listed firm. There are no YouTube gurus who know better than them. Use YouTube to find interesting bits of information on companies that you may otherwise miss. And when you find something interesting, do your own digging and see what the analysts in the big firms are saying. Never invest more than you can afford to lose, and don't expect to get rich quick. If you are interested in my background, I come from 16 years in risk management with PwC and Deloitte. I've never been on a trading floor in my life, but if I had, it wouldn't give me the edge on the big firms because they have big teams and masses of information. So don't look for a guru with an edge. Look for information on companies you're interested in. And if you're looking to invest a large amount of money, don't put it on individual stocks. Choose an index fund. The All World Index is a representation of all the stocks in the world. And if one company goes broke, then the index won't even move. Whereas if you've only invested in that one company, then you may have just lost your pension. Keep it fun, keep it affordable, and subscribe to keep getting my updates. Thanks.